Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. You know the drill, founded it back in 2003, 21 years ago, to provide advanced technical analysis. Anyway, I just did an extensive detailed video update yesterday on Labor Day, September 2nd. Today is September 3rd. Normally I wouldn't do a second YouTube video the next day, but given the fact that it was an absolutely bloody day today, basically a bloodbath on Wall Street. As you know, also, seasonality tends to be an extremely weak month of the year, seasonality. In fact, September's only posted a gain 30% of the time. Here's some general statistics you can look at. So, kind of funny. September historically weak, and the first trading day of September was down. Like I said, bloody day. Nvidia was down 9.5%. That is a very big drop for Nvidia, huge weighting. The semiconductors were the weakest sector today. Again, most sectors were down today, very broad-based. Consumer staples, just a few sectors were up, but most were bloody red. So I wanted to do a quick update following my extensive market video yesterday, just to show you guys where things are at. This is our backend recorder for our standard website subscription service. Again, it is Tuesday, September 3rd. And let's get this recording started. Hope everyone had a nice day. Hope everyone had a nice 3-day weekend. Again, as you know, guys, I just did the extensive weekend newsletter, which I posted on Labor Day on Monday. Anyway, heck of a sell-off today. September is historically the weakest month of the year. In fact, it's only up about 30% of the time. And it's funny, the first day of September, the market got absolutely pummeled. Again, absolute bloodbath today. The S&P 500 lost 120 points roughly, or 2.1%. That is a big down day, guys. And it's down pretty strongly here after hours. It's down another 30 points here in after hours. NASDAQ triple Qs lost 3%. That's a big day. And the Dow Jones 1.4%. And the Russell lost 3% as well. Okay. Nice rally, of course, in that inverse ETF that I've had for a hedge, SPXU. Again, most of the groups were down, guys. The few notable were, consumer staples, tobacco, beverages, they were up, but otherwise everything else was bloody red. Nvidia, as I said, dropped 9.5%, which is absolutely a massive move for one of the largest companies on the planet. All right. The VIX, as you know, had these open gaps. The VIX likes to fill the gaps, and there was one to the upside, which it filled today. The VIX also rallied perfectly off that 200-day moving average. Again, strong weakness in the commodities area, especially the energy area. Crude oil down 4.4%. That's a big down day. The notable strength in the commodities were some of the ags. Corn and wheat and natural gas were all up strongly. Precious metals also got smashed, not surprising. US dollar slightly up. Crypto, Bitcoin down. And again, as far as the market, guys, like I said, long term, we still have an uptrend, intermediate uptrend. Short term, downtrend. Now we'll see if a higher low can form or if something is more bearish. Today, the market also got spooked a little bit on the weaker than normal ISM manufacturing purchases. They came in below expectations. So market didn't like that, but there's a lot of things in factor here, guys. We're up near resistance. We're in the beginning of September, which is historically weak. We were overbought. So there was a lot of factors coming into a pullback. That said, it was a pretty good down day. Now, tomorrow, Wednesday, we have factory orders and beige book. On Friday, we have the jobs report. And let's go ahead and get started with things here. Get through this quickly. So, image number 2, this shows you some of the statistics for September, which, like I said, September tends to be one of the weakest months of the year from a seasonality standpoint. It's the only month to post a loss, and has only posted a gain 30% of the time, as you can see by this image and table. So Now we'll see. Could the market have made a lower high here and we go all the way to make new lows, or do we form a higher low? That's the question. Either way, the onus is on the bulls now, especially with that action in Nvidia. Next, image number 3, here's SPXU. That's the triple inverse ETF for the S&P. As you know, I've had this as a hedge. We had this nice base forming, and of course, big move out of that base today, up 6%. By the way, there's a couple open gaps which could be potential targets to the upside. I mean, this still looks like a pretty bullish chart. You came out of a nice base, increasing volume, you had MACD divergence, moving average ribbon was all tightly wound, starting to expand a little bit to the upside. So I wouldn't be surprised, at least if this fills that first open gap up there, maybe even get to the next one. So good hedge if you took this. Again, I've had this on the newsletters for the last week or so. Chart number 4, here's the 2-hour view, shows you the same thing. Again, had a nice base support here, launched out of that today. Again, there's a couple open gaps above that are likely targets in the short term. I wouldn't be surprised if we fill this first open gap tomorrow morning on further weakness. Next, image number 5, here's the VIX. As you know, the VIX, we had that VIX blowout on August 5th at that market bottom on August 5th when the VIX spiked up to 66, came back inside the upper Bollinger Bands, gave a VIX Bollinger Band buy signal, excellent signal. We had a good relentless 3-week rally up, allowed the VIX to retrace all the way down to the 200-day moving average where it found support initially. And then it found support again on Friday, kind of like a double bottom support on that 200-day moving average. And then boom, the VIX popped today hard as the market sold down. The S&P tested its middle Bollinger Band. That's the same as its 20-day moving average. Next, chart number 6, here's the 60-minute view of the VIX. Remember, the VIX likes to fill these gaps, even more so than the S&P. It was holding this demand zone over the last couple weeks. There was a couple open gaps down here. They could have been filled should the market had rallied to new highs right away. That said, that wasn't the case, so market sold off today, and we filled that open gap just above. That was your first magnet, so not surprised to see that. Next, image number 7. Here's the percentage of stocks in the S&P 500. They're trading above their 20-day moving average. Remember, this was firmly in overbought territory on Friday, and a big drop today. Another thing, here's the NYSE with the breadth thrust indicator. It's a McClellan type oscillator. There was a pretty good divergence here, as you can see, with respect to price. So we got a pretty nice rug pull today. And finally, chart number 9, here's the S&P at the top with the S&P XLP ratio. I showed this about a week ago. XLP is a defensive sector, so it tends to move opposite of the S&P. And XLP has been very strong. In fact, it's one of the sectors that were up today. So when you do the ratio, the S&P over the XLP, the ratio, you can see tends to be highly correlated with the S&P. But what you saw here lately was, look how much this ratio is underperforming relative to the S&P. So that was kind of an early warning here, and you can see that's playing out today. All right, moving back to the general market analysis. Image number 10 shows the index sector table, what transpired today. Again, bloody red day. Look at those big declines in the indexes, particularly the NASDAQ, down 3.25% in one day. As far as the 21 market sectors, 19 were down, or 18 were down, only 3 were up, and really one was flat, real estate, but consumer staples, utilities, that's it. Everything else got smacked. Metals and mining down 6%. Semiconductors down 7.75%. Big losses there. US dollar up slightly today, 0.2%. Bitcoin down. Commodities, big weakness in the energy area, particularly crude oil. Uranium down 6.5%. Natural gas. I refreshed the table. Some of these hadn't updated yet. So actually, natural gas had a pretty good day, rallying off that double bottom support. Otherwise, again, strong weakness in crude oil, down 4.3%. Commodity index down 2%. Uranium down 6.5%. Where we saw strength was corn, wheat, and of course natural gas. Those areas have had the bottoming looks to it, so they've had nice rallies. Corn, remember, had that nice falling wedge. Precious metals all to the downside, with the stocks leading to the downside. So perhaps we've put in that wave 3 of 5 I've been looking at, and we're looking for a deeper correction there. And the bond market, we saw a drop in the 10-year, 30-year Treasury yield. That didn't help the market though. And the yield curve back to 0.99. Remember on the weekend it was 1.0. Next, item number 11 shows the economic news calendar. Again, Wednesday we have factory orders, Fed beige book. The big one on the week is the jobs report, so we'll see how that looks. All right, moving on, chart number 12. Here's the this chart shows you the unemployment rate. I'm using the 5 and 9 exponential moving average crosses, and they tend to work very well on this unemployment rate. Remember, we'll get this number on Friday jobs report. But the reason why these moving average crosses work is because the way the unemployment rate moves, it's kind of like a barge. It makes these long rolling moves that last years at a time. So even though I'm not a big fan of moving average crosses because they can be kind of late, they actually work very well for the unemployment rate. And remember, the moving averages crossed bullish in late 2023, signaling that the unemployment rate is going to start an uptrend, and that's what it's done since then. You can see this. I think this is going to continue higher over time. All right, and that'll be one reason we'll eventually see that recession, guys. I think we'll just continue to see this unemployment rate tick up. And for this Friday, I know the economists are calling for 4.3% again, for it to remain the same. We'll see where it is. But longer term, I think this works higher. You can see how well these moving averages crosses worked in the past, and you can see clearly the trend is now up. I wouldn't be surprised if this trend's up now for a couple of years. Finally, chart number 13, here's the yield curve. Remember on the weekend, this ratio closed at 1.0, meaning both the 10-year, 2-year were the same price, non-inverted. Well, they fell back to an inverted area today. But we want to watch this, guys, because when this firmly goes above 1 and it's no longer inverted, that will officially signal, that's pretty much guaranteed signaling a recession. This has been one of the most reliable indicators about recessions, when the yield curve has been negative for a long period of time and then goes back positive. It's been inverted the longest in history for about 800 days. Next, chart number 14, here's Nvidia, down 9.5% today, absolute bloody day. You can see how it stopped at that supply zone a couple weeks ago. It rallied off the demand zone. Now I added fibs here from that recent low on August 5th. We're closing right in near the 61.8 fib. There's also a demand zone just a little bit down here, but if this doesn't hold, guys, then likely Nvidia will go down at least to test its 200-day moving average, if not make another low. But let's see if it can hold this demand zone or not. Remember, this is the biggest stock there is now, huge effect on the market. So whatever this does, it's going to affect the market. If Nvidia can't form a higher low here near this demand zone, then the market likely has quite a bit more room to fall. So we'll see. Onus is on the bulls here. But we're now nearing this demand zone, 61.8 fib, so it is an area to watch for potential support. Next, chart number 15, here's Dollar General. Remember, this got absolutely taken to the woodshed last week on that earnings report, falling down to the 2018 levels into the demand zone. A little bit bounce back today. Should this level fail, there's another one down there, but it shows you the destruction in some of these retailers. Absolutely pummeled. Buy and hold. If you simply bought and hold this stock, 8 years ago, you haven't made any money if you didn't take any profits. All right. Next, chart number 16, here's the standard daily view of the 5 major indexes. Again, bloody red. The Dow is the one index that made a new all-time high, while the others did not. The S&P got close. You could basically call it a double top, closing down near this 20-day moving average. NASDAQ closing below its 20-day moving average. It had kind of a flag look to it here, but today basically killed that. Now we'll see if we can form a higher low or not. Chart number 17, here's the Dow Jones. Again, it's the one index that made a slight new high. Pulling back, losing that 9 EMA today. 20 moving averages below, 50 days below that. There's also an open gap there. You can see down around that 40,000 area. That could be a magnet potentially on a deeper sell-off. Chart number 18, here's the S&P. Remember, it rallied off that demand zone on August 5th. pretty much a V rally into that resistance zone, almost a double top, and we're pulling back logically from there. We do have divergence up here, so could this be a bigger top? We'll see. We are in September now. Chart number 19, here's the daily KISS trend system. So big pullback today. Remember we had it to mark 913 combo? Well, price didn't immediately pull back there, but then finally let loose today. That 913 combo is pretty powerful. You can see we had 3 of them recently, and they all produced pullbacks. The one in June didn't produce much of one, but the one in July obviously did. The one in May produced a little pullback there as well. Anyway, so that's playing out. The ATR, that's your first big support, and the 50-day moving average, we're still holding those areas. Smart trailing stop still has plenty of room. Moving average ribbon's starting to squeeze here a bit. Chart number 20, here's the 4 time frames. Again, the daily upper left. Again, besides the mark 913 combo, you had all these A's, that's amateur buying. You had a lower volume on rising prices. You had a resistance cycle, so everything lined up there for a pullback, which we're getting. We'll see if we can hold the ATR. We're still holding the ATR on a closing basis on the half day. We lost it on the other time frames. Chart number 21, here's the simple daily S&P. Again, we had an ABC pullback into August, rally up. Didn't quite test the highs. We got pretty damn close. Big sell-off today, testing the 50-day moving average, 20-day moving averages. Now, should we go lower? There's an open gap there that would likely be an immediate target. Now we'll see if we can form a higher low on this. We are in September. We'll see. Chart number 22, here's a 2-hour view. Again, we stalled at that recent high, around 56.51, essentially a double top there. It was only about 5 points from the all-time highs. So anyway, we lost that support zone. Even went a little below that first demand zone before recovering. There's a big open gap there down around 54.60, which was likely to magnet tomorrow should we have weakness. Then you got another demand zone below there. Okay. Chart number 23, here's a 60-minute view. Again, we weren't able to take out that resistance. Big sell-off. The question is this a wave 4 of some sort? We'll see. There's an open gap. But if this gets too deep, then this is likely something else. But for now, we'll leave it labeled like that. And chart number 24, here's a 15-minute chart. Again, you can see that double top as of Friday morning and then just sell off today. Now, there's no MACD divergence or RSI divergence on a 15-minute time frame. So still very, very weak looking. That's why it wouldn't shock me if we went down more and filled that gap. Next, chart number 25, here's the NASDAQ. That's the weekly. Down 3% already. Big lower high so far in place. Chart number 26, here's the KISS system. Again, big down candle. We're still above the ATR, still above that smart trailing stop. Obviously, nice pullback from that to mark 9. Moving average ribbon's really pinching here, so we'll see if we can form a higher low or not. Chart number 27, here's the 4 time frames. Again, similar look to the S&P. Remember, we had that resistance cycle on the daily over a week ago, which has played out. Chart number 28, here's the daily. Boom, that's an ugly, ugly candle there, guys. 3% in one day. Filled that open gap. Remember, the S&P hasn't filled its gap. So that's why I think the S&P may fill its gap tomorrow, since it's close. But the Qs filled their gap. Now they're into a demand zone. We'll see if that can hold or not. Moving average ribbon's pinching here. Bulls need to come and defend this. Chart number 29, here's a 2-hour view showing you how we fill that gap. We're into a little demand zone. To me, guys, this wave, potential wave 4 here, is a little deep. It is allowed, but this could be something else. Maybe this could be a nested 1-2-1-2 if this can form a higher low. So this is getting quite a deep for a wave 4, but again, it technically hasn't negated because it hasn't went below the high of wave 1. Chart number 30, here's 60-minute view showing you how we fill that gap. Now, unfortunately, there's another open gap below as well. If we go to there, then that's going to be quite nasty, so we'll see. But there is another gap down there around 452.50 to be aware of. Chart number 31, here's IWM small caps, big drop today, 3%. Remember they stalled right at that supply zone over a week ago. Pulled back, formed a little lower high, big dump today. You have the 20-day, 50-day moving averages just below. And chart 32, here's a 2-hour view just showing that supply zone. Now we're back into a demand zone here. We'll see if that can hold. And of course, there's another open gap quite a bit below should that demand zone get lost. So there you go on the indexes, guys. ES futures have recovered a little bit since I recorded. They're down about 18 right now. They were down 30. Moving on, chart 33, here's the 10-year treasury yield. Nice drop today, 1.7%. Here I added a little trend line to monitor. Now, if rates can break that trend line and start maybe make another low, that could help the market recover. So let's see if we could see something like that. Obviously, the pullback in rates today did not help the market. Chart 34, there's the weekly. Again, still working on this wave C, which could be in, or maybe we need another low. We'd have a big demand zone down there. Chart 35, here's high yield corporate. HYG, on the weekend I showed this. It looked like an ascending triangle. Instead, it broke to the downside. Now there's an open gap here. It hasn't filled it. That's the horizontal line right around 78.60. It could be a magnet. Moving on to some of the market sectors. I'm only going to cover a few guys just to keep it short. XOP, that's consumer staples, one of the defensive sectors. Also utilities, they were up. So now this next high has some divergence setting up here. These have had quite a run. So should the market bounce here soon, maybe this will pull back. Utilities were up today as well. Chart 37, technology, again, this is the weakest sector by far, down 4.6%. Remember, it filled that gap this morning, and there's another gap below. It looks like it filled that. I added some fibs here as well. 61.8 fib comes in a little below that 200-day moving average. Bulls need to defend that. Really, the bulls, they don't want to go below this 61 fib. If that happens, then the odds start favoring a test of the lows or even new lows. Chart 38, here's semiconductors, down 7.5%. Remember, NVIDIA was down 9.5%. 200-day moving average is a stone throw away. Ugly chart here. Can this still make a higher low or not? We'll see, but ugly, ugly. Chart 39, financials. This area has been super strong. Finally, a little pullback today, but it's been very strong sector. Chart 40, healthcare, also been a very strong sector, but getting a bit parabolic. And chart 41, energy, down as well. Again, most sectors were down today, guys. Moving on to commodities, chart 42, DBC down 2%, so gapped right below that trend line. We had a double bottom bounce in early August. Now, is this going to hold or not, or is it going to let loose? So if we look at the weekly, here's the weekly. We're back near that lower coil trend line. So, guys, if it breaks this line in 200-week moving average, it could let loose perhaps. Maybe this is a sign of a global weakening economy, not just U.S., but globally. Maybe that's hinting at that recession. Chart 44, corn. Remember, I've been stalking this for the last week and a half. This falling wedge on corn with a MACD divergence. It triggered last Tuesday. If you bought that with initial stop, it then broke out of its wedge on Friday. Nice follow through today. This has been a very nice trade. Again, it's not a big percentage mover, not a beta mover, but nice move out of that wedge. This is the area now to take some profits if you haven't done so. Chart 45, natural gas, UNG, another nice sector, up 3.9%. Remember, held this double bottom. It was a good buy last week. We'll see if this can now build. Chart 46, crude oil down 4.4%. Ugly day. There's a little support here, but this doesn't hold. There's a gap below. Could be the next target, and there's another support zone below that. Energy area looks ugly. Chart 47, here's crude oil itself, smashing through that lower coil trend line and demand zone. Very ugly. Here's the weekly chart. You can see so far, slight close below this weekly coil. Again, you can see the moving average ribbon trying to curl down. It's been tightly wound. If you really wanted to see weakness in the market, if this were to dump hard, that would definitely be indicative of economic slowdown. Chart 49, copper. After a nice bounce following an ABC pullback, stalled perfectly at that resistance, which from the June lows became that previous low became resistance. Nice pullback today, falling back below the 200-day moving average. Chart 50, DBA agriculture down a little bit today, but still quite strong. And there's the weekly chart. Like I said, we put in a potential ABC. All right. Now we'll see if this ends up playing out, but the strength today was primarily in the agriculture area. Chart 52, uranium down 6.5% today. So lower high last week, following that dead cat bounce, following the head and shoulders that played out. Down again now. Now we'll see. There's a support here. Demand zone. You have the 200 or 130. You have the moving average there, and you have the long-term uptrend line. Chart 53, Bitcoin up a little bit here this week, 0.8%. I still think this put in a wave 4 low there, but we'll see. Still struggling in this pattern otherwise. Chart 54, here's the daily. Still struggling in this pattern, this expanded coil. Chart 55, Ethereum. Remember, this simply had an ABC 3-wave wedge bounce into that resistance last week where it sold off from. Chart 55, US dollar. Remember, rallied nicely off that big support last week. Struggling here a little bit at the 20-day moving average, not surprising. Chart 57, here's the weekly view of the dollar. So on a bounce here, for now I'm viewing this bounce as a wave 4 with that last sell-off as a wave 3. Chart 58, gold. Here's gold leaking oil a bit. Again, only down 0.2% today, but it's had this wedge look for a while. It's now starting to play out a little bit. Chart 59, here's gold on the weekly. Remember, I have been watching for this possible completed wave 3 of 5. If this is complete, we have divergence here, MACD, RSI, then we'll eventually see that deeper wave 4 pullback correction. It'll still be a bull market, guys, but it will be a deeper wave 4. Chart 60, here's the monthly chart. Like I said, deeper pullback here, I'd view it as a wave 4. You got a big demand zone down here. I do expect gold to eventually rally to all-time highs. Chart 61, silver, absolutely getting smashed. Let's hope silver can hold that low there in early August, that potential ABC bottom, but ugly day to day. Chart 62, there's the monthly chart, which I think is really bullish, but again, it's going to take quite a while for this monthly chart to play out, guys. Remember, each candle represents 1 month. Chart 63, palladium, showed this in the weekend, still in this bottoming type pattern. Palladium and platinum have both been very weak. They haven't been strong like gold and silver. Chart 64, here's GDX getting smashed today. There was an open gap, filled that. Tagged its 50-day moving average before bouncing. Stocks are underperforming the metal. This looks quite weak. Chart 65, here's the BPGDM GDX trading system using the Rinko and the parabolic SAR. Remember, this was on a sell signal a week ago. It's now starting to play out. Finally, following up with trade ideas. So we've had primarily long ideas here. Remember, we had the SPXU inverse ETF, which is playing out nicely today. But some of these longs have done well. CB, Chubb, it's been on the watch list for a couple weeks. Nice coil. It's moved up nicely here. Is a good swing, as you can see. Chart 67, here's the 60-minute view. Again, absolute textbook coil, breakout, back test, nice rally. If you haven't taken some profits, please do so, guys. Again, it's been a nice swing. You could have held this for the last couple weeks. It's time to take a little bit of profits, though. Chart 68, CNC. Remember, this has been on my list as well for a while. Last pullbacks held that 20-day moving average, finally breaking out today, bucking the market trend. Chart 68, Duke Energy. Remember, this is a long last week, very tight coil. Broke out on Friday technically. Hope you bought it. Nice follow through today despite the big sell-off in the market. Chart 70, Gurn. Now this is one that triggered technically on Friday, breaking that downtrend line. Today, bloody red. Now here's the thing, guys. If you were long this, I was long. I stopped out right where you see my purple dotted line. I just used a tight stop there around that candle low, just below that lower trend line. And that's how trading is, guys. Sometimes you get in a position, the market reverses and you get stopped out. But if you can have tight stops, you live to trade another day. Chart 71, AAOI, one from the weekend that looked good and had a nice follow through today. It is into a first target zone. Jabber at 72, ABUS was another one from the weekend. Nice little breakout today. Jabber 73, PAR. This is one from last week that broke out on Friday. Pulling back today. Still looks okay if it can hold in here. It needs to hold this trend line. Jabber 74, ATEC. One from last week. Still valid if it can kind of hold around in here. Looks okay at the moment. Jabber 75, YUMC. It's been on the list here for a couple weeks. Still a very valid setup. Clear this 3450 as resistance. It's holding up here well. If it can clear this out, I think it at least fills that gap above. Jabber 76, GPN, one from the weekend. Still valid, but it's got a clear resistance there. Jabber 77, Intel. I put it on the weekend. Never triggered. It looked pretty good on Friday, but big sell-off today. We'll keep it here for now unless it really starts to break down. All right, guys. That'll do it. We'll see what happens tomorrow. Quick check on futures. ES futures are down 17. Gold is up 1. And crude oil is down 40 cents. All right, we'll see what happens tomorrow. I think Steve gets back tomorrow or the next day. I'm sure he's going to need a day or two to recover. All right, take care. Have a wonderful evening.